Hello, my name is Vladimir Tikhomirov. I'm Chief Economist at BCS Global Markets, and in this communication I'll give you my outlook for the coming week. The past week, perhaps the most important for the Russian market development from the past week was the central bank meeting on Friday. The central bank expectedly decided to cut, although some participants were expecting even a larger cut, but eventually the central bank decided to cut its rate by 25 basis points to 4.25. In her communication after the meeting, the central bank chief Nabiullina said that she sees more space for new rate cuts. Basically, that's a quite clear signal that more rate cuts could be coming. Although I am not that confirmed that this would actually happen, due to the fact that, according to my estimates, already in late September or early October, the inflation in Russia, annualized inflation, could actually reach central bank target of 4%. So with the rate currently at 4.25, I don't think that the central bank might have a lot of room to cut again. Next time the central bank meets is on the 18th of September, so we'll be watching and looking at what is going to do then. Of course, we have almost 2 months before the central bank meets, and there will be a lot of events happening both globally and domestically, including inflation, oil prices. So that's a point to watch. Out of the developments of the past week, another one of big importance, which still continues to have its impact on the markets this week, is the state of relations between US and China. We have seen a new escalation of tensions between the two countries, which towards the end of past week has created more like correction pressures on global markets, and this is something that the markets will be watching closely this week. The communication between the two countries is not very supportive for market sentiment, given the size of the two economies in the global economy. Another event for the coming week would be the meeting of U.S. Central Bank, the Fed, on Tuesday and Wednesday. I, as well as majority of the market, we do not expect to see any rate cuts from the from the Fed. Basically, with the current rate of around 0, I don't think that they have a lot of room to cut. And given their past communications, I actually do not expect them to push forward with new programs of support for the U.S. economy. Earlier, they said quite clearly that they are waiting for U.S. administration to make their move in supporting the economy, and I think that will be the case. So basically, I don't think there will be a lot of outtakes from the Fed meeting, apart from their commentary on the state of U.S. and global economy. And of course, another development to watch this week is the discussions of new package to support U.S. economy in the Congress. The discussions gained pace last week, and chances are that already this week some package could be approved, although the latest indications are that the Congress might actually vote not for the whole package, but for various items in the package, which could mean that the final sum of aid that the Congress can approve could be less than the discussed $1 trillion. Nevertheless, it's quite a significant amount of money, and it's going to have an impact on the market if it is approved. Quite a positive one for US market, for global markets, including the Russian market. And perhaps last but not least is the geopolitical developments around Russia that we'll be watching. We have seen a significant increase in discussions over the new sanctions in US and Europe. These discussions are going to continue this week, and perhaps this week or next week we might see some of the sanctions being introduced, which is of course could be a negative thing. These are the events we'll be watching. Otherwise, I actually expect ruble to trade more or less at the same levels we've seen last week, around 72 rubles to the dollar. Thank you.